want to welcome Thierry Heles on our show. Hi, Thierry. Thanks for joining us today.
Thank you both for having me. It's a pleasure to be here and do this in person.
Thanks. I'm here with my co-funding partner, Thijmen Meijer, and today we are having a discussion about your journey and the Next Leap podcast. And we are curious to hear about what you have learned over your work working with university fund managers. But before that, this is kind of a funny situation interviewing the interviewer, right? Because the first time we met actually was you made an interview with me. Now we, exchange or swap. How do you say?
Turn the tables.
Switch.
Swap seats.
Swap seats. Yes. So, how did you end up doing your podcast? Where are you coming from, and what made you do this?
That is, I will try and keep the answer short. I think I've always been interested in podcasts as a medium for like the last 20 years. I've done various podcasts over the years. I previously did a podcast for my former employer that was also kind of going out and interviewing people in this field, tech transfer officers, fund managers, those kinds of things. And just over a year and a half ago-ish now, I decided to leave that job and kind of strike out and go on my own, found the next leap, kind of build a media company that I thought I wanted to lead and shape it how I wanted to shape it. And the podcast was kind of a natural way of, well, both promoting myself and still maintaining those discussions, conversations with people in the field like yourself, having interviewed you last year. And it's a really good medium, I think, to connect with people and give them the space to tell their stories, because they can let their personality shine through, for example, rather than a written article, which is more heavily edited than a podcast conversation.
Sure. And why and how did you end up in the university venture capital segment or the innovation segment, let's say?
I ended up in it relatively randomly, in that about 13 years ago, I was just a freelancer, copywriter, and my old housemate from university reached out to me one day and was like, we're looking for freelance journalists to write about spinouts. And I was like, I've never heard of a spinout. What is that? But I had capacity at the time, and I joined, and I was pretty much hooked from the get-go. And I focused on more the kind of the spin-out angle. So spin-outs raising money, spin-outs achieving exits for several years before I kind of became interested in university funds more specifically. And that's possibly also because that's how the sector kind of evolved. So you had Oxford Science Enterprises kind of being launched in 2015, 2016-ish. And then since then, there's been a real explosion of university funds. And then in 2022, 23, thereabouts, I decided that I would sit down and kind of start researching these funds and figure out which universities actually have one, maybe what geographies are more advanced in this. At the time, I found some relatively interesting findings in that in Europe, if you use a list of, I think I used the QS ranking of top universities, it was about 40% of the top universities in Europe had access to a fund. That wasn't always necessarily their own fund. It was sometimes was fund that was shared between multiple universities. In Australia, it was almost all of them that had access to a fund.
Wow.
In Asia, it was varied. Japan, very advanced. Other nations in Asia, maybe not so much. And in the US, it was about a third of the R1 institutions that had a fund, which was surprising to me because Europe was sort of slightly leading there compared to the US.
Interesting.
But then you could argue that in the US, maybe they didn't necessarily... Stanford doesn't need their own fund because they're literally down Sand Hill Road. They got Sequoia and everyone else next door. They don't need to raise their own fund.
Correct.
Whereas in Europe, you often don't have, depending on where you are, most cities don't have mature venture capital ecosystems. So they kind of had to go and do it on their own. And in Australia, to a certain extent as well, no one really flies down to Perth to look at spinouts down there. Yeah.
If we circle back, what does it really? What hooked you on to this sector? What was it? What was
I think what hooked me into the tech transfer spin-out aspect was it. I would say it's sort of like you start seeing this almost invisible layer in society. Like I went to a few universities, as a lot of people have, or I've gone to at least one. No one ever mentioned a spin-out to me. No tech transfer. And okay, I didn't do STEM. I did English, but then I went to a business school, and again at the business school, no one ever mentioned tech transfer, which I kind of thought that was maybe like an obvious kind of way. If you study business, maybe that's a person that they would maybe want to have in a tech transfer office in some capacity. And then, when I kind of learned about this world, you kind of start seeing, like if an invention is made in the university, it does get out. And I kind of always thought it gets out, but I never really questioned how that happens. I'm like, someone finds a cure for this disease, and then obviously that will become a therapy or a drug, but how, I never really questioned. And then when you start scratching the surface, you find really common things like Gatorade, for example, started at the University of Florida, and it's called Gatorade because it was a drink made for their sports team, which is called the Gators. So like lemonade, they called it Gatorade. And you start seeing these things just sort of everywhere, and you're like, wow, okay, like, and no one knows this is happening. Like, but not everything, but a lot of things go back to university research. And then I was like, well, how does that bit actually work? How do they actually do that? And it's a fascination that hasn't stopped, as I've talked to so many people that work in this, and it's kind of once you're in, people tend not to leave. Sort of a lifelong obsession, or at least a 14-year obsession for me by now. Yeah,
that's long enough to confidently call it an obsession.
Yeah.
What I really like in your work is that you're somehow combining like very sector specific news, following some of the key stakeholders, maybe joining to a new firm or heading up an innovation office. So it's not only about the firms, but the people as well. So the network. And during this conversation, of course, considering that Thijmen is coming from talent acquisition and recruitment, so we also want to better understand that the talent pool that the UVC sector is working with, and because it has its own characteristics as any industry. And from my perspective, I'm really curious to learn more about your findings in terms of how new university funds are established. And do you see any patterns, either geographically or stage-wise, or from any angle? So maybe we can start or continue with the talent part.
Sure. Yeah. Absolutely. I was wondering actually if you see any trends, because you're in the business already for quite a while, if there's any trends that are like very surprising to you, because you keep track of quite some movements within the UVC and tech transfer world. Any trends that are very surprising to you?
I don't know if there are necessarily trends that have surprised me. Often what you see, especially in tech transfer offices, is kind of PhDs, postdocs, maybe do an internship with a tech transfer office, and then they just kind of work their way up the chain. Very classic career, I guess, in a lot of niches. Occasionally, I think you do get these these really interesting stories that I think should be more of a trend. So Oxford recently, their I can never remember if it's vice provost, vice president of innovation, one of those, vice chancellor of innovation. But the person who got the job now created a spin-out in 2008, I think it was, Organox, took it all the way to a £1 billion exit last year, I think it was. And now they've moved him from being a professor to being a head, in charge of innovation. I think that should be happening at a lot more institutions. The people that have kind of gone through the whole process kind of have it seen from, this is the research, this is a spin out, this is the exit. I understand everything. I understand what it takes to raise money. I understand how to shepherd a technology all the way to an acquisition or an IPO, as it may be. But often it's not those people that
Do you
get
see
those
mostly
jobs.
from outside of the UVC or the tech transfer office, like a typical market VC?
I mean, if you specifically look at UVCs, often it is the people that bring the venture capital expertise, the people that maybe investment banking expertise. So if I remember this right, Duncan Johnson, who runs Northern Gridstone, the Manchester, Sheffield, Leeds, Liverpool University Fund, he came from investment banking. So it is people that have the finance expertise. Occasionally you get examples of people who've run a TTO and then have gone out and gone into VC. So you've got John Flavin, for example, who created the Polski Center, which is the tech transfer office at the University of Chicago, then left and set up Portal Innovations, which is now, it's raised a few funds, but has gone on to the VC side. His name escapes me now, but I know that the University of Utah, who ran the TTO there, then went out. Keith Marmer, that's his name, left and went into venture capital. But often it is the people who are already bringing some kind of venture capital expertise that are put in charge of those funds, either because the university sets up the fund and that's the people that they're looking for, or people who are in VC and become interested in this area and then either set up a fund with a university or look for a job in that area. But I think that's probably right. You probably don't want someone who knows how to commercialize to be the person that does the investments, because I would argue that they are slightly different skill sets. They're complementary, and those people should work together. But the person who runs a fund should not be the person that runs a TTO, generally speaking.
Yeah, but the person actually, the GP, that's the start of the head of innovation at a VC, it usually comes already with a deep tech background or somebody with, because the university VCs are more long term. It's a slightly different curveball, let's say, than a typical market VC. Do you see any difference here or any?
I mean, you certainly do get those people that bring that deep expertise. You have, for example, Stefan Kriskau, who runs IR Ventures, which is backed by 6 Swedish universities, and then they have a sort of a sidecar vehicle with University of Copenhagen called UCPH Ventures, and he previously ran Novo's corporate venture capital fund. So he brings that, and they're now focused on life sciences. So he brings that deep expertise of the sector, and he's got that pharma experience as well. Same with IMEC Expand, for example, which is attached to IMEC in the Semiconductor Research Institute in Belgium. That team kind of brought venture capital experience and semiconductor experience with them. It really depends what your aim is for the fund. So if you have a fund like IR Ventures that's focused on life sciences, then you want the life sciences people. Yeah. But if you set up a university venture fund that you just hope invests in your spinouts, then it might not necessarily help you that someone has maybe run a quantum or about done quantum investments before because they might get a social sciences person standing in front of them because that's that's the research that's come out. So I don't. You probably want a relatively comprehensive team. Like you want the expertise on that team. You need people that are able to do the due diligence on those technologies. But I don't know if the GP having the deep expertise in one sector is necessarily what's needed. You want someone who knows how to raise a fund, run a fund. The financial background is really what counts in that position. And then someone who knows how to build a team that can pick up the expertise that you might lack.
And do you see any international moves, or is it rather geographically bound to the...
I can't think of one. I would assume that within Europe it probably happens. I don't know if it really happens. If you're in the US, you might not really. You kind of stick to the US. If you're in Australia, probably gonna stick to Australia. Although I know that Australia and New Zealand, they like to send people to the UK and do sort of a year overseas to kind of gain expertise, which is kind of true in, not specifically in VC, but I think it's part of their, you go overseas and you kind of see how things are done somewhere else. I mean, I know Károly, I think that happens with some people. They go abroad and gain their expertise somewhere else.
I think that's pretty, well, maybe not very common, but it's it's a good way to take home some best practices for sure, and align with the wider ecosystem.
Yeah, and I know I've spoken to a few people in Ireland, for example, that have gone to the US and they got their corporate VP jobs, and then they've come back with all that experience and they've learned how to build startups and get products into the marketplace, and then apply that from a TTO or from a UVC point. But I can't think of an example now where someone may have run a fund in, I don't know, in New York and then decided to go and run a fund in Germany. Not saying that doesn't exist, but
So can you give us an overview about the market in Europe and then rest of the world? Like how many funds are there? What are the typical sizes? Do you actually see new funds being established, or is it more like a stagnant number?
I've mostly been focusing my research on European funds in the more recent months. There's over 100, I think there's about 108, 109 that I've identified so far. And I'm taking a relatively broad definition. So it's funds that are kind of actually attached to like one university that one university set up, like Oxford Science Enterprises. I am also counting funds like Karma Fund in Germany, which some might argue that are not university funds, or things like a Leap Ventures, which is attached to an incubator that's backed by the university, so it's one step removed. And there's still new ones being launched. Certainly in continental Europe. In the UK, there's a bit of a funding dearth at the moment. They're kind of struggling to raise new funds. Even funds that were announced 1 or 2 years ago have kind of struggled to find anchor investors, which geopolitical realities, financial realities of the UK at the moment. But no, so like the Leap Ventures that I mentioned, that was launched last year. There was Delphinus Venture Capital that was launched in Denmark. PSV, which is attached to TU Denmark, they raised another fund not that long ago. So new funds are still being raised. Size-wise, it really varies. You get the relatively single-digit small funds to the behemoths like the Oxford Science Enterprises, which is $1 billion. And then quite literally everything in between. 10 million, 50 million, 100 million. It's a reflection of the local ecosystems, I would say, the pipelines that they have access to, the LPs that they have access to. Often if the EIF comes in as an anchor investor, that's sort of often a big chunk of cash, which some funds want the EIF, maybe some fund managers don't want to have to deal with a public institutional investor. So there's those choices to be made as well. Some some funds prefer being backed by corporations because then that means they get access to that expertise. Like Oxford's, backed by GV, called Google Ventures, Tencent, kind of big corporates that can bring the technical expertise and then also provide follow-on funding and can co-invest in the portfolio.
How many funds, in your definition? Now we learned what you are a bit more forgiving. What you call a university venture capital fund. So you say in Europe there are currently somewhere around 108 or so.
Yeah.
How about US or the rest of the world? How many of those are currently there?
Around the world, I would probably put the number at about 250-ish.
Mm-hmm.
Again, it kind of depends on how you define it. Like in the US, you could possibly argue that Osage University Partners is also very much in the uni-VC field because they focus on university startups and spin-outs. That's their whole premise. But then they are an entirely independent venture capital firm that just has partnerships and access to TTO pipelines. But yeah, I would say around the world about 250, which most of them kind of concentrated in Europe and then the US. And then to some degree in Japan, which is sort of a shining light in Asia because they have a almost strangely mature university VC ecosystem.
Yeah, I was going to ask, how did Japan, become so active in this segment?
So they decided about 10, 12 years ago that universities should have funds to invest in their startups. There was a centralized government decision. And then there was capital available to kind of get the whole thing going. And that's really worked almost phenomenally well, to the point where now you have University of Tokyo has two. They have University of Tokyo Innovation Platform and they have University of Tokyo Edge Capital Partners, which is more of like an external venture capital firm backed by the university. But UTokyo IPC, they run a fund called the ASA Fund, which is backed by the Tokyo. I think it was originated by the Tokyo Metropolitan Government and backed by the local government. That now goes out and invests in other university funds. So they've kind of, as well as investing in their own spinouts, they've become kind of a catalyst for other university funds, which is not really something you see in other geographies. Not yet, anyway. Maybe others will catch up. But that's then enabled maybe smaller universities to raise fund, and then at the same time also kind of get that expertise in from a much more mature, bigger fund that really knows how to build ecosystems. And then you through that get access to co-investors. Like that's that flywheel that everyone always talks about. Like you kind of yeah.
And where do you see like connections between ecosystems is another interesting part of this sector. Some, and of course it also relates to the definition of an ecosystem. So looking at it from here, UK is one ecosystem, but it's not. We all know that. So there is the Oxford, Cambridge area, or what is it
The
called?
Golden Triangle,
the
yeah,
triangle.
Oxford, Cambridge, and London. Yeah,
And then on the north, the corridor.
yeah, yeah.
So those are large ecosystems, but they are, like, you can say the UK has the most advanced ecosystem in the university venture capital sector in Europe, probably, if you define from that perspective.
Yeah.
But then the UK ecosystem is connected to traditionally very strongly to the US, and as you mentioned, to Australia and New Zealand. And now we talked about Japan. Not that they need to be connected to, I don't know, Europe. I think they have a fun time with their initiatives. But is there any connection between these ecosystems? Do you see any, or is it more happening on a opportunistic basis? It just happens, but it's not organized.
I think it was University of Tokyo Edge Capital Partners, but they've invested in the UK as well.
Oh,
I think it was at least a quantum startup. But from their point of view, then, well, there's a technology that we're interested in. We're going to go and invest over there because that's a startup that's doing great things. To then bring that expertise back to Japan, because it's a sector that, well, everyone wants to be. Well, everyone used to be wanting to lead in quantum. Now it's leading in AI, but quantum's not gone away. So those kind of very broad international investments happen. There's Theodorus, which is a Belgian university fund. They set up an office in Montreal in Canada. Now they're spinning that fund off into a separate venture capital firm. So you do get those kind of cross-border investments. You do also get the more kind of regional multi-university funds. So Vives Funds is a good example, located in Belgium. But they've also got a partnership with the University of Luxembourg, where we are now. Well, we're not at the university, but in Luxembourg, and they've got partnerships in the Netherlands. So they've kind of expanded sort of across the Benelux, which is culturally quite close, and geographically all kind of close as well. But there's still, I would say, it's still the exception. I'm not saying these funds don't talk to each other, because they probably do talk to each other, but it's still very, very rare to see them kind of expand beyond their own. And that's partly, I think, because often when you have kind of a classic university fund, like using the narrow definition of this was set up by one university, often the university then goes, well, we're creating a fund for our spinouts. Why are you going to Zurich to find a pipeline?
Yeah.
I think that will change. I think as the ecosystem matures, it will change. And then especially with the bigger funds, where you might have raised 100, 200 million, you might have that pipeline that's been built up because there hasn't been funding, but can you sustain that pipeline? Or do you then need to go and look at opportunities elsewhere? Do you need partnerships with other universities?
And have you seen any late stage university investor funds? Because I think, so we just had a nice discussion with and about EIF's new initiatives, like the ETSI 2.0. And also there are many other initiatives on the deep tech late stage investments. There is clearly a funding gap. But have you seen any university funds that are investing late stage? Because that would be quite unique. Maybe Oxford has one?
Yeah, Oxford maybe invests more in the later stages now that they've got 10 years of having built a portfolio. I think often it's a question of capital capacity, especially if you're talking deep tech, where the funding requirements just exponential. you might get away with a few million early on, but then you very quickly reach 50, 100 million
Easily.
dollar requirements or euro requirements, which obviously that's not one investor putting in that money. You need a consortium of investors, but I think that's significantly harder for a university to pull off.
Yeah.
And I think often the problem that universities have is that they have great startups, great spin-outs, and they don't get anywhere because the investors are in the golden triangle. And even you have in the UK, you have this group of 6 universities called Z², which is sort of the southwest corridor, so from like Cardiff, Bristol, Bath, Exeter, Southampton, Surrey. Was that 6? Did I forget one?
Mm-hmm.
No. But even they have to run their investor day in London. Like they have to take their spin-outs there because even with 6 universities, the investors are like, well, if you're not coming to us, then.
Wow.
And that's true kind of everywhere. Like I know in the US, the University of Colorado Boulder, they run an investor day with kind of other local institutions where they bring their best 10, 12 startups, and then they bring the investors in because the investors don't want to go to Boulder to look at 2 spin-outs.
Yeah.
Because, why are you not coming to Silicon Valley? That's where we are. We're not getting on a plane. Broadly speaking, I'm sure there's investors out there that do.
So that, I see kind of the same bottleneck in the UVC sector, meaning there needs to be a massive deal flow available for a fund. And usually one university is not capable of generating such a deal flow. And I think it wouldn't be even fair to expect all universities to be able to, spin out like tens of, 50s every year. Yeah. So naturally, I would expect more UVC funds to be covering multiple universities.
Yeah.
But that's a different. That requires a different approach and different tools to get there to launch such a fund.
Yeah.
Not that it's easier or more difficult, I don't know, but it's just very different because none of the universities can hold ownership or all of them need to. Otherwise, there is the bias problem. Like if one university controls the fund more, then there is always conflict of interest and priorities can collide. So that's an interesting one, but
you almost need that vision kind of from the get-go, even if you set up the fund as, so like Engine Ventures, for example, which came out of MIT, even there you kind of need to go, okay, we're setting up this fund. It will be, I think it was called the Engine at the time, now like an incubator attached to it as well. We'll put money in. And then it very quickly also expanded to kind of Harvard University. And it started backing spin-outs out of Rice University and that corridor kind of down past the East Coast. They've raised follow-on funds because that created a pipeline. But it was because MIT didn't go, we're setting up our fund will invest in our spin-outs. You said 50 spin-outs. Even MIT, Columbia, they produce 20 to 30 spin-outs a year. Yeah, that's not a pipeline for a $500 million fund.
Definitely not.
You're not.
Not even for a $100 million fund, because out of that 20,
you're not going to invest in all of them anyway.
There's not a 100% conversion rate from spin-off to fundable. Yeah. So definitely. How do you define the relevance of what you are doing for your audience?
So I would say my audience is people within innovation ecosystems. So that is the TTOs, that is the investors, that's also the legal experts because they are also part of it. Someone needs to write the contracts. someone needs to do the due diligence, someone needs to make sure that patents are filed and all those things. Someone needs to negotiate licensing agreements. So yeah, kind of people who work in innovation ecosystems in the broadest sense. And within that, my coverage mostly focuses on what's happening in tech transfer offices and what's happening in university funds. Currently, primarily news articles, so new funds being raised, people moving around the industry. The podcast, then interviewing people who run funds, people who run TTOs, lawyers, hopefully in future also successful spin-out founders, because I think that's also an interesting story and not one that gets told that much. Like, how did you take this company from an idea in your lab to an IPO or an acquisition? Or maybe not. Maybe it failed. That's also interesting. You know, why did it collapse? And I want it to be a resource for people who work in this field, so they can come to it as they're hopefully learning something new, finding out how maybe things are done at other funds or at other tech transfer offices, through the podcast and in future also through kind of more in-depth feature articles, case studies, which I've got lined up, and maybe they'll be out by the time that this podcast goes out. That depends on the timing. But yeah, more in-depth kind of articles as well as the timely news articles. But yeah, you mentioned people earlier. I think it's the people that make this industry, and that's partly why I track who's going where, because that's interesting, you know.
Absolutely.
Do you also planning to bring in policymakers?
Yes.
Or people working in and around this?
Yeah, I would be very interested in having policymakers on as well. Often I found, especially with people who actively work in government, unless they are the politician, which I don't know if I want a politician on the podcast, often they're not quite at liberty to talk freely, because they're often civil servants, and they have, especially in the UK, they got quite strict rules about they can't be seen as the voice of the government. So yeah, it depends whether I will convince myself that having a politician on the show is a good idea. I don't know if I would necessarily look forward to having to ask the same question 15 times and getting evasive answers. But no, I would be very interested in people who work in the policy area in this. I know there's people that sometimes maybe sit more on the outside trying to influence policy through think tanks or through consultancies or but maybe not the government people themselves. If someone sends me an email and goes, I want to be on this, I might not say no, but I don't think they would be my first target to reach out to.
Like, what makes an asset class underwritable, investable from an LP perspective? And also there are many types of LPs, so it might differ from an investment bank, from a pension fund, and so on. But by becoming a bit more visible for the LPs, it would actually also it would help a great deal the ecosystem. More clarity, better understanding, and the incentive is already there. I think the impact that I would expect is better alignment with LP expectations. So, but that requires some more visibility from the LP side, some more communication probably. And I totally respect that many LPs are not interested in this asset class. All good, but then the ones that are already investing, I think they could also learn from each other. I don't know how connected some of these LPs are, but I bet not all of them are connected. By the way, that's why we want to organize a GPLP event only for university venture capital funds, because that layer is kind of missing to have a 100% relevant space, and I think it could be it's a media channel or an event, or both. These things strengthen each other.
Mm-hmm. Yeah, I think that would be a really good place for these people to come and tell their stories, and why they have invested. And I think you're right. A lot of them will have very different reasons why they've backed it. Sometimes it might be place-based. You want to support your local ecosystem.
Yeah.
Sometimes it will be purely financial. I know in the UK they've been trying to convince pension funds to invest more in venture capital. Hasn't really worked. They've changed the rules and it hasn't really happened, partly because they aren't forcing pension funds to do it. So pension funds are like, well, I'm not being forced to put money into university venture funds. So
why are they reluctant?
I mean, pension funds are probably, out of all the LPs, the most conservative. It's people. I don't want them to gamble with my pension,
as they should be.
They need to be conservative. They want to invest in something where they go, this will return X% over the next 25 years. Whereas if you invest in a venture capital fund, there is a risk that the money will disappear. Hopefully it won't. Hopefully you will get the outsized return, but it is that 1 in 10.
Sure.
And if you don't hit that 1 in 10, then the fund maybe just returns the cash to the investor. Maybe the investor loses out on some money, and that's not what pension funds want to do.
Yeah.
It's too much.
It's
risk
too much risk
for them.
Yeah.
But then, how would you explain the incredible difference in ratio of capital allocated by pension funds to venture capital funds between Europe and US? The percentage of assets under management by pension funds in Europe, I don't remember the exact number, but 0.008, whereas in the US it's like, I don't know, 2%.
Yeah.
It's a huge difference. So I don't think they are more risk-taking. There must be something else to it. I don't know.
That's a tough question, and I haven't spoken to US pension funds. It might be cultural. It might be because venture capital as an asset class is significantly, well, maybe that's not right. It's not more mature in the US because it's also mature in Europe, but it's been around for significantly longer. 60, 70-ish years. Silicon Valley has been around. And obviously it started very small. It's a really hard question. Why in the US they might?
Yeah, it's kind of a rhetoric question also.
Yeah.
I don't think anybody knows the exact answer to that. But drawing from that, if we knew the answer, would be would maybe help for the European ecosystem. I'm pretty sure some of, for example, EIF is nudging the big LPs in Europe to co-invest along with EIF, but it's not really happening. So,
is it not because in the US there is a more structured capital market? I mean, there's just one, right? And here in Europe, it's a bit more fragmented. And the capital markets side
could be one, because in Europe, exactly like you also said, Thierry, that many of the LPs invest locally, like in France or in the UK or in Germany. That's what I mean locally, and that's all good. And that's where Europe is a fragmented market, is a disadvantage.
Yeah,
from that
it is still incredibly hard to invest cross-border.
It is.
They talk about the single market, but it doesn't exist for venture capital.
Yeah.
I mean, the pension funds, I know in Australia, Uniseed was sort of a really big venture capital fund that's been around for 25 years. They convinced pension funds to invest by, I think, initially waiving fees. So the pension fund didn't have to pay fees. So they got the pension fund investment, and the pension fund then got access to a portfolio where they could then funnel more investment into the good startups later on. And I had Peter Devine on my podcast a while ago, who ran UniSeed for about 20 years. And his argument was, if you want to have pension funds invest in Europe, maybe that's where the government should step in, go, we'll cover
the fees,
the management fees. Because then, that could be several million on top of what the pension funds put in. That could be the lever that you wanna pull. You go, well, you'll save 5 million if you invest however much, and that can still be, maybe instead of 0.01%, it could be 0.1%. That would already be tenfold increase. Would already be making a difference. But then, what government in Europe at the moment wants to? None. Yeah. I think pension funds are probably the toughest nut to crack. That might not be who you want to go after.
Definitely, they are the toughest one.
You might want to go after the corporations, maybe institutional investors, maybe
family
local
offices.
Governments. Yeah,
It's a very typical career ladder or horizontal moves, basically.
yeah. I don't think there's anything too weird going on.
No.
You see as I said, maybe the sideways moves from people coming in with industry experience, or people who maybe have run a TTO then moving into the investment side, or maybe moving into a spin out themselves, becoming spin out CEO or CTO. That's probably the weirdest you see. And then, as I mentioned, occasionally you get someone like the person at Oxford who's done the spin out and now is in charge of innovation. I don't think I've ever seen someone who maybe was a banker who then suddenly got put in charge of a TTO. The skill sets are too different.
Yeah. So out of the box candidates would not suffice here. Would not work.
You want a certain skill set to run a fund or to run a TTO. That might be the industry expertise. That might be, maybe you have the legal expertise. Maybe you were a patent lawyer. I know, for example, the University of Alaska Fairbanks, the guy who runs the TTO came through it from a legal background. But again, that's kind of relevant to then what you're doing, and then you build a team around you that has the other skills, that maybe has the science expertise.
But do you know any TTOs or UVCs that have any kind of talent strategy internally, or any?
Yeah, I mean, there's often, I think they do it through internships. So they have sometimes more or less structured internship programs. Sometimes they have master students. Often it's kind of PhDs or postdocs. Partly, I think it's interesting for the students because if you do a PhD or a postdoc these days, the odds are you will not become a professor. Academia is, there's limited career opportunities, just because universities are underfunded pretty much everywhere. And so funneling them in to a tech transfer office is often quite an interesting way of using the expertise that the university has taught them for their PhD, for their postdoc. And then they often, especially if they are postdocs in labs that maybe have already commercialized something, they've kind of seen the process, whether they were actively involved in it or whether it was others.
And do you see any shortage of talent throughout these 240 funds, as you mentioned? Job openings that have been open for X amount of time?
Yeah, if they are open for a long amount of time, it's often because, especially if it's TTOs, it's because they're not paying as much as maybe you would get if you were in business development in a corporate. And then often you get perks that maybe people earlier in their career enjoy. Like you might get to travel a lot, whereas if you work in a university tech transfer department, your travel is probably, if they have a satellite campus, then maybe you go to like a few relevant conferences, and the pay is just not. So if it's the money that you care about, and if you are earlier in your career, you might want to build a nest egg, you might want to have a family, you might not want to have just finished your postdoc and then be on a $50,000 salary somewhere. But then it also depends. In the US, if you work for a university, you often get healthcare benefits that outweigh significantly what you might get somewhere else. So yeah, that's the job openings that are there often just. It's often because they're very low paid. But then I often also see people that run tech transfer offices kind of commenting on job posts on LinkedIn going, you're underpaying your staff. But it is a university and you can't.
Yeah, they also don't have
the means. But yeah, if you put out a job ad and you say, I want someone with 7 years experience, I'm paying $60,000.
Good luck with that.
I think once you're in it, a lot of people just don't leave. And a lot of people, when they retire, they still sort of stick around and they might run training courses and those kinds of things. Like people tend to want to stick around and give back. Also because it is a community. Like universities sort of compete with each other, but if you're in tech transfer, it's a very collegial community because you're all trying to do the same thing. And you don't really control what kind of technologies come through the door. Like you have no impact on the research that's being done, short of contracted research that you might be negotiating the contracts for.
And do you have any success story that one specific individual turned a fund, from a bad performer to a proper performer?
Let's look at Uniseed in Australia. For the first 13, 14, 15 years, they didn't really have a blockbuster exit. Like they got formed just before the dot-com crash. And then they had to make it through the global financial crisis. Like they had a really bad first decade of just having to deal with things that were not their doing, just the economic climate. But initially, a lot of the funding that went to the startups then worked with the university labs, so they paid researchers, they paid they had PhDs. So the universities got a return on their investment outside the millions and millions in capital returns. So it was an underperforming fund in capital terms for a long time, but the university still benefited because what they put into the spinouts, it fed back into their labs. It helped their researchers. It led to commercial relationships. So it was still, for the universities, enough of a success, which I think is why it was allowed to keep going, because universities benefited. But it's really hard to kind of get funds to admit that they failed. I think that's true in venture capital in general.
Not gonna happen.
You don't really go out and go, oh yeah, my return is 0.3x. Like no one would put that on LinkedIn or publicly admit it. You hear the blockbusters, or if the fund maybe didn't go well, then it just sort of
disappears,
quietly disappears, and you never hear anything again. And they don't raise another fund. Yeah. I mean, what's interesting is you do have the universities that have tried to run internal funds. So the University of Notre Dame, for example, in the US, they had an internal fund. Very quickly, as you would realize, that you need a lot of back office capacity to do that. And then they didn't do that again. They partnered with an external firm to manage the fund, which I guess you could they didn't turn around the first fund, but they kind of learned their lesson that maybe the model that they used initially wasn't a failure, but it just wasn't suited to university.
Fair enough. Yeah.
And I think that's the lesson for every university. Don't have a fund that's entirely internal. Have an external management team that knows that what they're doing, and that sits slightly removed from the TTO. Maybe you can share an office with them, but legally, I would argue that the university fund should be separate from the university.
I agree.
Yeah. If you disagree, send me a message. I would like to hear from you. But
exactly.
Yeah.
No, I mean there are many different situations, different ecosystems, even different university setups, like in terms of ownership or KPIs of a certain university. Like you said, and by the way, some of the investors on the market also I've seen working like that. Like I invest, but then I will also provide some services for which you are going to pay. I mean, if the value is there and if it's not obligatory, so by choice, every startup or spin-off has to purchase services from the market in any case. So selling lab services, it's a more obvious thing than other. So it makes sense. But all I'm saying is that there are many different forms of structure between university and its investment vehicle.
Yeah.
So it's hard to come up with a one size fits all solution, and probably
I don't think you should.
we shouldn't. Yeah, exactly.